In today's video, I'm going to be going through the exact A+ setup that you can use instantly from today to be able to get into these very simple setups. We're also going to be exploring the difference between an A+ and a B setup and really looking at how we can use this both on the lower time frame and the higher time frame as well. So stick around to the rest of the video where we're going to discuss everything in much more detail. Now, this entire video is going to be built up on the premise of this simple fact. The only way you can determine between an A+ setup and a B setup is simply how it's moving according to the trend. Now, as you can see over here, we've got very clear moves to the upside where price continuously makes more breaker structures, and we expect another breaker structure to hold up as well. Now, this move over here from this phase to this phase is exactly what we're going to call the B phase. Now, the B phase is going to be defined as what? You are essentially going counter trend. The A phase is once you get to a particular area of discount, you are now going to be waiting for price to continue on with this exact expansion. Now, during this A phase is when we are going to get our A+ setups. So remember, the B phase or our B+ setups are going to come counter trend. Now, we can get into these trades, particularly on the lower time frame, because yes, there's going to be plenty of imbalances around these areas or areas where, you know, price is very uneven just by price action. So we are going to counteract it with sells. Our A phase, however, is going to capitalize on not only the imbalance that we've got in this particular expansion over here, but also once we've got a clear indication that we are continuing in that particular direction. So everything we go through today with the exact entry models are going to be based on these two simple facts. Now, before we get into any trade examples, what I really want to look at is this exact piece of market structure over here and pay very close attention because what I'm going to go through can actually start to get quite advanced. Now, remember, what the first thing you want to do when you actually look at the market is see what the general direction is. Clearly, Euro USD has been uptrending. Over here, we have a high, we have a higher low, higher high, higher low, higher high. Eventually, at some point, what we actually get is a full-on break of this level down here. As soon as we get that break towards the downside, we know that we have officially changed the trend. Now, when do we know we have officially changed the trend? Is when this primary piece of structure actually gets broken. This is what we like to call the external highs and lows. Now, these external highs and lows in the market are going to be the most important areas. Why is it that these hold so much validity in the market? Because let's just take a look at the internal structure. Clearly, we can see that this right here, let's actually just change the color as well for the meantime in this particular example. This low over here is actually an internal piece of structure. Why is that? Because this, even though, yes, it did cause this push to the upside, what was the last relevant low before all of this was actually printed? Well, it was clearly this area down here. Now, what we can actually see in the market is as soon as this is broken, we have now officially changed the trend. Now, what does this mean? We have to look at our most recent high and our most recent low that generated this exact move. Now, for me personally, what I would actually rate that as is something like this. We clearly have been moving towards the downside over here. Let's get back to the red color over here. We clearly have been moving towards the downside as we started to get into this move over here. Price then printed this low. We now have our low over here as well. What generated this exact move over here? Well, this was the last relevant high. So I know that my new primary piece of structure is going to be this high over here and this low over here. So this is the exact range that we're going to be looking at. So just to make that very clear, every time you have a solid break of structure or a change of character in a certain direction, you have to list out where is our most relevant high and where is our most relevant low. These are the only areas you really want to pay close attention to. Everything inside is all going to be internal structure. This is going to take a lesser importance when it comes to everything. Now, does this mean that we are only ever going to be looking for sells? Well, no, because if we actually want to capitalize on the moves in the markets, we can clearly see that this is a level of imbalance. Prices eventually, if it breaks this level, it's going to push upwards, potentially might even do this little thing over here. Up until where? Well, it's going to be very simple. Up until key levels of supply within this particular zone. So for me personally, what I would actually particularly look at is something like this. So my general bias for the market at the moment is I have this primary high over here. I'm expecting for price to either give us a reaction from this zone over here and start to sell off, or potentially even higher. The importance of both of them are obviously going to be quite high, but the highest one is this. If this level over here is completely broken, that's when we know, okay, we've got a full-on change of character to the upside. Now, how can we capitalize on all of this? Remember how we started our lesson. Everything that we do here is going to be based on what? We have consolidation periods and expansion periods. How do we actually get in on this particular move over here? Because we want to expand on the expansion, right? So this is exactly what we're left with. We have a high time frame movement towards the downside. We've got a lower time frame change of character up. So for me personally, if I want to capitalize on these buys over here, all I'm going to do is to wait for price to give me a conclusive break up, a pullback to some sort of a supply demand zone. In this particular example, it would be a demand zone. And then for price to expand all the way up until this area. That's all I'm going to be waiting on. So let's just see how price actually plays. What we can actually see is price eventually didn't give us that opportunity, but we obviously keep that in mind. Price has now given us these sells over here. And this is exactly what we look for. Remember, when you've got two particular points of interest that are very valid, you have to confirm both of them. In this particular one over here, we got absolutely no reaction at all. But it was this over here where on the lower time frame, you could have taken advantage. Just a quick little tip for those of you that are wondering, how do you actually get into these on the higher time frame if you're not entering entry limits? It's very simple. You wait for an engulfing candle away from that particular area. So in this example here, over here, what you'd be looking at is something like this, where price engulfs it and moves away. However, that's not exactly what we're going to get into in today's video. Now, we know that we have reacted from this area. We now have what? A proper change of character to the downside on the lower time frame. So I'm in two states of mind at the moment. I've got a clear bias where price potentially might push back into this area and move over here. Or potentially, if price actually exceeds all this area, we've got a very, very nice level of demand to actually push us back into this range. Now remember, the most ideal situation is exactly this. We want to continuously look for sells until we get this break over here. So let's just see how price actually moved. Exactly that. So price has now pulled back to this particular area. All I'm going to be doing on the lower time frame is starting to look for entries over here. Now, even if, let's just say we push it down to the 15-minute and usually you're working on the 1 hour, what you generally want to wait for is this. The high time frame point of interest has now been activated. So for me personally, if I'm looking at the 1 hour, what I'm going to be looking at is something like this. This 1 hour candle looks pretty good because we've actually broken this level. This was the last up candle before all of this down move. We've even got one up there, but this looks pretty great. So on the lower time frame, if we're working on the on the 1 hour, we bring it down to the 15-minute. You're going to wait for price to give you this little move over here, a change of character to the downside. Now remember, when it comes to the lower time frame, you don't necessarily need a proper body closure, but it does help. On the high time frame, I would say it's a lot more important. On the lower time frame, again, everything is fractal. So on the 5-minute, this might look like a great engulfing down. Again, it just depends. What I'm going to do when I've got this particular point over here is I'm not going to look for the first point of interest to actually get into in the market. I'm going to be looking for some sort of sweep of liquidity. If I see a sweep after this change of character, I know for certain that this is going to be a high quality setup. So what can I see? I've got a level of liquidity resting over here. Just above, I've got a 15-minute order block, which on the 5-minute may also look really, really good. Yep, there we go. Price has now swept that liquidity, run into this level. All I'm going to do now is start to look for reactions away from this zone, and it's as simple as that. This is generally how you're going to take it down to the lower time frame. Where do you aim for is going to be the main question. Well, if we're working with all of this internal structure, what we really want to be looking at is the internal low. This is exactly it. Now, this is going to be one of the safest points that you could actually aim for because we've got what? We've got the high time frame on our on our bias over here. So we know that we're going to be moving to the downside. We also have things like a proper change of character. Again, even here as well, we've got areas of order blocks over here, so we might potentially react from there. This generally looks quite good. If you do want to continue it on with the higher time frame, have a little look. The 1 hour structure. What do we see? A very nice downtrending environment over here. Price has fully had a change of character. We know for sure that if we are following the trend, eventually at some point, we are going to continue all the way down to this particular demand zone over here. And that is exactly what I'm going to be waiting for. So let's just see what price actually does after that 1 to 3. Price continues all the way down to this particular area over here. Cool. Let's just take a little pause over here. Now, this right here is what I would like to call, let's just call it an A+ setup. Why? Because we have followed the general high time frame trend. We have also followed the lower time frame structure to actually get into our trade. And then finally, we actually executed. Now, a B setup is going to be something like this, where you are moving against the higher time frame trend. But what you can actually see is you've got a very, very nice sort of higher time frame demand zone or something within this leg. Now, does it mean that price is always going to react from this particular area? Not always. It's not always going to be as simple as that. Because again, you're kind of working against a trend. If you were to get into a setup exactly like this, for example, on the higher time frame, where's the easiest level you can aim for? Well, it's going to be the supply zone. Because again, we have the initiative that we are moving to the downside on the high time frame. So this right here might just be a pullback to this kind of area, and then we start to sell off. We cannot be sure until we get our interactions over here. Now, this is going to be something that we call a B setup. How are we going to get more of an A setup? Well, it's going to be very simple. You look at the higher time frame narrative. So right here, we've now officially had a change of character. So I'm going to mark that up just over there. We've officially had a change of character. What would happen at this point is once we've got this change of character, I'm instantly going to be thinking, all right, where can we potentially get into buys? Because remember, all of this movement over here was for the sells. We now officially are going to be looking for buys. Where from? Well, this is going to be our new range, the high and the low. So once we actually get into our setup over here, this is essentially the two areas that I'm mainly going to be waiting on. We always, as a general rule of thumb, what you typically want to look for is something like this, where you've got a 61.8% retracement, generally any sort of order blocks around that area. Now, let's just see how price actually progresses. Cool. So what we've got over here is price did not pull back to that level, which fine, doesn't happen all the time. What we can actually wait for now is exactly this. We've had a fresh breaker structure to the upside. So this is exactly what we love to see. We are never really sure when the exact high is going to come in until we see lower time frame structure start to break. So as soon as this is broken down now, we start to monitor it. Okay, so that's still going to be the newest high over here. So we're still going to be waiting for more of a break to the downside. There we go. We're starting to get it. So I can now classify this as our primary high. This is going to be our primary low. This is going to be our primary high. Remember, this is now the new range that we're going to be dealing with. Within this range, I am now going to be eliminating the previous range we've had. I particularly like this point of interest over here and potentially even, let's just say that area over there in case it revisits it. But for me, this looks pretty good. So what I could do at this point is on the lower time frame, I can get into particular sells that take me down here. But remember, that's only a B setup. You're working against a high time frame trend. What we want to wait for with an A+ setup is going to be exactly this. Price gives us this kind of area and we start to get some type of entry model. Remember, this particular video is not going to be about the entry model. If you do want complete access to that, the exact entry model that I particularly use, I've got an entire document down below. You can sign up to it for completely free. You'll join my email list and I'll send you literally everything that you need as well. So let's just wait and see. How does this actually progress? Price is still consolidating around this period. We now are tapping into this area. Perfect. So this is exactly what I'm going to be waiting on. Once I see this, I have proper conviction that price is now going to respect it. I could enter a higher time frame move exactly like this, a simple 1 to 3 setup. I really don't have to think about it at all. I could just let it run for the next few days and it'll be as simple as that. Or what I could do is start to look at the lower time frame. As you can see, price eventually just reacts from it and starts to boost all the way upwards. So this is exactly the way that you can do it. An exact A+ setup again and again and again. So what have we concluded from this entire video? Remember, when you're looking at the two main types of market conditions, you are always going to be looking for consolidations and expansions in particular directions, but you want to be linking it up to market structure as well. Remember, once you've got a consolidation period at the top, we expect some sort of expansion to happen over here, revisit this level of consolidation, and eventually we want to get into that expansion. How do we get into it? Well, it's following these very, very simple market structure rules. So guys, I hope you have understood this lesson. If you do have any questions, leave them down below in the comment section. I'll be happy to answer any of them. And yeah, hope you enjoyed this video and I'll see you all in the next one. Take care, everyone.